Well, hello and welcome to another video in this series where we're taking a closer look at the MSI indicator for quantum trading, otherwise known as the market strength indicator, which really encapsulates what it's all about. It's trying to convey the strength in whatever market is you are considering. And so far, we've looked at ETFs and we've looked at sectors, and now we're moving on, and we've also looked at futures as well. Now we're moving on to stocks here. What I've tried to do throughout these videos here also, I think, is to bring together other ideas to try and plant some thoughts in your mind as to how to use the indicator in a creative way. So it's not simply about looking at the extremes, the overbought and the oversold, which are important nevertheless and great places to get into trends early, if that is your if that suits your risk profile. If not, then you're going to jump on a trend in a line on the chart that is sloping steeply lower or steeply higher. That signals that there is a strong trend in that instrument. But outside of that, we're also looking at other aspects of the indicator of stocks or ETFs or index futures, whatever they may be. Are they moving in the same direction? Are they moving counter? Do we have markets which are inversely correlated, where we have classically the stocks with index futures with the VIX, of course, where the VIX will move in one direction and equities will move in an opposite direction. These are very classical, or it is a very classical relationship, and there are many others as well. Now, what I've done in this video is I've taken 4 stocks. We're very much in the technology sector, and I've planted them on top of the SPY along with the XLK. So what you're looking at here across 3 time frames, beg your pardon, we've got the 5-minute, the 10-minute, and the 15-minute on the right-hand side. What you're looking at are 4 stocks, 1 sector, and 1 index. And it's probably easier to look at them here. The SPY is the gray line. The XLK, the sector, is the brown line. And then we have the purple line, which is AMD, that's Advanced Micro Devices. We've got INTC, which is Intel. We've got Tesla, which is the green here. And down at the bottom, we've got AVGO, which is Broadcom, which is the orange line. And really moving over to the 5-minute time frame, as you can see, the XLK is pretty much following around the SPY, the gray line. So the gray and the blue, the gray and the brown line are relatively closely correlated, as you might expect. They are following one another relatively closely. And then we're looking at our 4 stocks. And really the 2 that stand out are these 2, the pink line and the purple line. That's Intel and AMD. And you can see here we had very much up into strongly overbought before plunging down here to the bottom and then rallying a little bit. And just to put this all into context, this was on a Friday, end of session. I'm recording this on a Saturday. And indeed, this was running into a 3-day weekend ahead of Labor Day. So just to frame the conversation, if you will. So this was the close of session at 9 o'clock our time in the UK. But nevertheless, a very nice move there on both those. And I think it also raises some interesting points here. First of all, the most obvious statement to make is that we have 2 stocks falling in technology, and yet we have the technology sector, the XLK, and indeed the SPY moving firmly higher over this relatively short window. It's what is it? It's just an hour and a half, something like that. But nevertheless, the concept and the idea that creates is that the reason, you might wonder why that is. Well, the part of the reason is that the 2 stocks in question, in other words, the AMD and Broadcom, do not constitute very significant proportions of the index. And therefore, it raises this whole idea, this whole issue that when an index is rising, and if you've studied the various modules, you'll know this full well, that a handful of stocks are responsible primarily for driving indices, the primary indices, And if a stock is not one of those principal stocks to drive the index, in other words, it doesn't have a large weighting in the index, then it is not going to influence the index in any great way and may therefore be able to move in an entirely different direction to what you are seeing in terms of the index. And really, this goes to the heart, if you like, of the market strength indicator and what it can reveal for you. Because if you labor under the misapprehension that if a sector and an index are rising strongly or falling strongly, then every other stock in that sector is going to be doing the same thing, then I'm afraid it doesn't work like that for many, many different reasons, particularly due to the weighting that any stock has in context as far as it has in the index. So you can see that clearly here. And to extend that conversation further, in fact, on the day, two of the biggest, Apple and Microsoft, did very little on the day. And it was another reason that the market per se, although it doesn't look like it here, it was in essence moving sideways pretty much. It was in a reasonably narrow range, not a very tight range, but it was certainly moving sideways and primarily ahead of the 3-day weekend. That said, as an intraday trader, clearly, as you can see from these examples, perfectly possible to take advantages of moves to the upside and the downside, wherever they may be. Very strong move here in Tesla. We had a pretty sharp sell-off over this hourly period here, and then a nice recovery moving into the end of the session. And that was reflected over here and also here over on the longer term on the 15-minute as well. And again, precisely the same takeaways, lessons here. You can see these two stocks up here rolling over, and yet we've got the XLK and the SPY climbing nicely here on the 15-minute time window. But as I say, this really brings together some of the elements that we've talked about, where we looked at sectors in a previous example, and also we've looked at ETF indices with the SPY and others. And one other aspect of the ETF indices that I didn't mention at the time, when we're looking at relationships between the SPY and the Russell 2000 and the Dow and obviously the QQQs, one thing you need to be aware of, certainly as far as the Russell is concerned, we call it risk on risk because the Russell is, if you like, the next level of risk above those three primary indices, because in the Russell you're dealing with mid cap and you're dealing with much bigger risk. And therefore what you do often see is two things. First of all, if the Russell is rising with your ETF indices, that's very positive because it's telling you that the risk aspect of market sentiment is very much higher than if we've simply got the three primary indices moving higher and perhaps the Russell is moving lower. So the Russell is, if you like, is a real risk gauge in its own right. And if it moves in conjunction with the other three primaries, then it really is telling you that is strong sentiment. So something to bear in mind, and something I should have mentioned in that video. So apologies that I did mean to bring it in, but didn't at the time. So there we are, a very nice workspace which brings together those elements of stocks, of indices, and of sectors all in one place. Now what I'm going to do very quickly, just to pull it all together and really frame it against what we always use, which is our underpinning methodology, which is volume price analysis. Let's look at the stock and the ETF on those across the time horizon. I've set up a couple of workspaces with 8 charts, so let's do that now. And here we are on SPY with, I haven't got any other indicators on here. I've just got our tick volumes at the bottom there. So it's just the price chart with volume. And we go from the 1 minute down to the 20 minute. I'm not going to go across them because it was a relatively muted day. And just to give you a sense of what did go on during the session, this is pretty much it. It was a relatively quiet day, not a huge amount, a lot of congestion. We had an initial phase of price action here. And then throughout the rest of the session, it was very quiet. And we always get this big upsurge in volume at the close of the session, which is very typical. as I've explained in other videos, we get this curve that forms. We get higher volume at the start. The market then settles into its average volume, if you like, through the trading session, obviously the ups and downs. And then at the end of the session, in the last 15, 20 minutes, we get a big upsurge as positions are closed, as big orders come in, etc., etc. And we always see that. We always see this profile. It's not quite parabolic, but it's very much a curved shape to the volume profile over the period of the session during the day. But that was SPY on Friday, so it was relatively quiet. As you say, we had this big surge and then into the congestion phase. And let's just move over finally onto the sector chart. And here we are on the sector chart, and I've done the same time frames here. So let me just pop open the 20-minute for you there. There we go. Let's just pull that down. That was the previous day. There we go. And as you can see, pretty much the same sort of price action. Initial volatility at the open. We had quite a bit of volatility following NFP. And then for the rest of the session, it was pretty much contained, moving in a sideways direction. So there we are. I hope you've enjoyed this video. Lots more to come, as always, and more to discuss and cover on the market strength indicator for quantum trading. So see you soon, and bye for now.